Investing in LG. Is this consumer electronics giant worth it? LG, three letters that stand for quality, innovation, and global recognition. From televisions and refrigerators to electric vehicle components and next-generation displays, LG Electronics has built a reputation as one of the world's most respected consumer technology brands. But for investors, the question remains, is LG still a smart place to put your money? Or has this legacy giant peaked in a rapidly changing tech landscape? LG's story begins in 1958 when the company was founded as Gold Star. In the early days, it manufactured simple household products like radios, fans, and televisions. These early successes laid the foundation for what would become a multinational empire known today as LG Electronics. Over the next few decades, the company's innovation-driven culture propelled it forward, making it one of the leading forces in electronics manufacturing. By the late 20th century, LG had become synonymous with sleek design, reliable quality, and cutting-edge features. Its tagline, "Life's Good," reflected not just a marketing slogan but a philosophy, improving people's lives through technology. However, behind the positive image lies a company that has constantly faced waves of competition, economic shifts, and technological disruption. To understand LG's current investment potential, we need to break down its operations and performance. LG Electronics is divided into four major business segments: home appliance and air solution, home entertainment, vehicle component solutions, and business solutions. Each of these divisions plays a crucial role in shaping the company's financial strength and growth prospects. The home appliance and air solution division is the backbone of LG's revenue. This segment includes refrigerators, washing machines, vacuum cleaners, and air conditioners, products that have earned the brand global trust. LG dominates this space with smart, energy-efficient designs and connected home technologies. The company's commitment to AI-powered appliances has positioned it as a leader in the smart home revolution. From refrigerators that manage grocery lists to washing machines that optimize detergent use, LG continues to redefine convenience for modern households. Next is the home entertainment division, which focuses on televisions, sound systems, and monitors. LG's OLED technology has revolutionized the TV industry with unmatched contrast, vivid colors, and ultra-thin panels. Even as competitors like Samsung and Sony battle for dominance, LG's OLED innovation keeps it at the top of the premium TV market. Analysts often call LG the king of OLED, and for good reason. Many other brands actually buy LG's panels for their own high-end TVs. However, the home entertainment segment is also facing intense competition. The rise of budget-friendly Chinese manufacturers such as TCL, Hisense, and Xiaomi has pressured pricing in global markets. While LG remains the quality leader, maintaining profitability in this environment requires constant innovation and strong brand differentiation. Then there's the Vehicle Component Solutions division, arguably LG's most exciting growth engine. As the world shifts toward electric and connected vehicles, LG has positioned itself as a vital player in the automotive supply chain. The company develops infotainment systems, EV components, sensors, and batteries, supplying some of the world's biggest automakers, including General Motors, Hyundai, and Tesla. This segment has been growing rapidly, contributing billions to LG's annual revenue. The global electric vehicle market is expected to surpass $1 trillion by the end of the decade, and LG is determined to capture a substantial slice of that pie. With strategic investments in battery technology and in-car entertainment, this division could transform LG from a household brand into a mobility powerhouse. The Business Solutions division handles products like commercial displays, solar panels, and digital signage. While smaller compared to the other segments, it represents LG's strategic push into the B2B sector, particularly in renewable energy and large-scale display technology for commercial use. Financially, LG Electronics remains strong. The company generates more than $60 billion in annual revenue, supported by steady profits across its core businesses. Even during turbulent periods, such as the global chip shortage, inflationary pressures, and pandemic-era disruptions, LG has managed to maintain stable operating margins, typically around 4% to 6%. Its strong balance sheet and consistent dividend payments make it a favorite among long-term, risk-averse investors. LG is not a speculative tech bet. It's a steady performer with a focus on resilience and sustainability. The company's long-term debt remains well managed, and its cash flow generation continues to fund new research, acquisitions, and shareholder returns. Yet, for all its strengths, LG's story hasn't been without setbacks. The most notable was the shutdown of its smartphone division in 2021. Once a major competitor to Samsung and Apple, LG's mobile business suffered from years of declining sales, poor market positioning, and fierce competition. By exiting the smartphone market, LG effectively cut off a weak limb to preserve the health of its core operations. The move was widely seen as a strategic pivot, allowing the company to reallocate resources toward more promising areas like EV components and home technology. Competition remains LG's biggest challenge. In home entertainment, Samsung dominates globally with massive marketing and brand power. In appliances, Chinese competitors continue to erode market share by offering low-cost alternatives. In EV technology, giants like Bosch, Continental, and Panasonic all compete for the same automotive contracts. To stay relevant, LG must continue leveraging its innovation, partnerships, and quality advantage. LG's R&D investments are crucial to maintaining that edge. Every year, the company pours billions into research and development, particularly in AI, robotics, and next-generation displays. Its AI platform, ThinQ, is the centerpiece of its connected ecosystem, linking all LG products into one smart network. Whether it's an air conditioner that adjusts temperature automatically or a TV that recommends content based on viewing habits, LG's AI integration is redefining user experience. Another major factor driving LG's future is sustainability. The company has committed to achieving carbon neutrality by 2030 and aims to use more eco-friendly materials across its product lines. LG's appliances and displays are being designed for higher energy efficiency, aligning with global green regulations and consumer preferences for sustainable brands. This not only improves LG's reputation but also reduces long-term operational risks tied to environmental policies. Let's talk valuation. Compared to its peers, LG Electronics trades at a modest price-to-earnings ratio, signaling that it might be undervalued. The company offers stable dividends, making it appealing for income-focused investors. However, its stock doesn't deliver explosive growth like high-flying tech firms such as Nvidia or Tesla. LG is more of a steady compounder, the kind of stock that delivers consistent performance over years rather than months. For foreign investors, there are some considerations. LG's primary listing is on the Korea Exchange, and while its shares are accessible via global brokerages, investors need to account for currency risk and lower liquidity compared to major U.S. tech stocks. Still, for those seeking exposure to the global consumer electronics and EV supply chain, LG offers a diversified and relatively safe entry point. Now, where is LG headed next? The company's focus on AI-driven appliances, EV partnerships, and display innovation paints a picture of long-term growth potential. LG is exploring foldable and transparent display technologies, pushing boundaries in digital signage and immersive entertainment. It's also expanding its EV solutions unit with contracts across Europe and North America, creating a long runway for future revenue. LG's competitive advantage lies in its ability to adapt. Few companies have successfully navigated so many industry shifts, from analog radios to smart homes and now electric vehicles. This adaptability has allowed LG to survive while many of its former competitors faded away. Still, there are risks that investors must not ignore. The company operates in an environment heavily influenced by global trade dynamics. Tariffs, geopolitical tensions, and supply chain disruptions can quickly impact production costs. Currency fluctuations also play a role, as a significant portion of LG's revenue comes from exports. Moreover, as technology cycles shorten, LG must continually innovate to stay ahead. Consumers today demand faster, smarter, and more sustainable devices. Failure to meet these expectations could erode LG's brand equity over time. So, is LG worth investing in? The answer depends on your strategy. If you're looking for a growth stock that can skyrocket in a year, LG might not fit that profile. But if you value stability, consistent performance, and a foothold in several future-focused industries, LG deserves serious consideration. It's a company with deep expertise, global reach, and a culture of reinvention. The EV and smart home markets alone could provide tremendous upside in the coming decade. LG's steady hand, combined with its technological prowess, gives it a foundation that many companies envy but few can replicate. LG may not be the flashiest name in tech investing, but it's a symbol of quiet strength, a legacy brand evolving with the times. Its products are in millions of homes, cars, and offices worldwide, creating a diversified business model that cushions it from volatility. Investors who understand this dynamic, who see value in longevity, innovation, and resilience, will likely appreciate what LG brings to the table. It may not make headlines every week, but it's the kind of company that keeps delivering year after year. In the end, investing in LG isn't just about chasing returns. It's about trusting a brand that has proven it can adapt, endure, and innovate across generations. And that, in the fast-changing world of technology, is a rare and valuable trait.